The following is a presentation of TFNN. The Trader's Edge, Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 13th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a good day, a great day. Well, let's make sure we have an extraordinary one. Good, great, or otherwise. Let's have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out, if we can, what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in. Phone lines are open. 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, just put radio show question, and in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific, sometimes turnaround Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 11 points, 25,378 is the print. 380 is the print. So we got a flat market there. S&P is up 9 points, 0.3% to the upside. NDX is up 0.7%. That's 47 points. So you've got all the indices to the upside with the exception of the Dow. Spot volatility index is back 63 pennies. That's off 3%, trading at 1982. But that's not enough. That is not enough for Stevie. That means it's not enough for you either. Gold is off $1. Silver's down 3 pennies. Light sweet crude off 334, a little over 5%. Natural gas is up 7%. Leading the charge, the upside, Booking Holdings. That's up $17. AutoZone up 15. Advanced Auto Parts up 14. Tesla up 11. NVIDIA up 11. To the downside, Madrigal Pharmaceuticals off nearly 10%. $17 and change. Fizz, oh, what a relief it is getting some relief, down nearly $9 off 8.5%. That's National Beverage. Sage Therapeutics off 7. Boeing down 6. Plenty to look at. Of course, you know the deal. We only want to look at what you want to look at. So let's go to our first question. We've got two, one by email, one inside the Tiger's Den. So get in on the action, folks. There's only two questions here. Tom G writes in first, says, good afternoon, Steve. Great afternoon, Tom. He says, I've been trading this SPXL. That's a long triple for the S&P for the past 2 days. It is treating me very, very, very well. That's great to hear. I'm wondering what you think about buying more this week and maybe, holding it until next week because of T-Day. That could be a turnaround Tuesday day, which is usually a positive week in the market. It can't be Tuesday, T-Day. I'm long again at 44.25. All right, so let's try to answer Tom's question. Now, Tom is typically a short-term trader, so let's do a couple of different things for Tom and for you out there. What is it that Stevie sees on the short term for the S&P, or really the ES Mini? So, Tom, if it's okay with you, we'll just step through this one step at a time. I know I'm kind of repeating myself. We'll just take this one step at a time here. That sounds a little bit better. So here, when you and I take a look at a 30-minute time frame chart, what my eyes see are a consolidation. If we take a look at the consolidation here, I would draw it in essence something like this. We can see the bottom of the consolidation. You can see back here at about 8:30 last night, as prices moving down, creates that Rhodes momentum indicator signal. It's a key reversal, bullish engulfing, the whole 9 yards, so to speak. That area was tested Did not get busted through, but you can see that the bulls were lined up there because you had that little bull sash candle. Larry, Kudlow or not, doesn't really matter. What we know is where the bulls are lined up. We can also see that to the upside. I haven't really drawn this to the tick here. We can see that at about, let's just take a look at the time period here. Let's get it correct. 4 o'clock this morning, as price was moving up, it ran right into what's the upper level of the consolidation. Now, you and I can even take this and we can pull it back a little bit further. And when we pull it back a little bit further to the left out here, you'll see this little bear sash candle at about 3 o'clock yesterday afternoon, giving you a clear indication of where the sellers were lined up. We can see that that's the case because at 4 o'clock in the morning, that's where the sellers showed up again. Now, what they were unable to do, those sellers, was to push price down below Stevie's red line. This is a 30-minute time frame chart. So in essence, short-term bullish on a 30-minute time frame chart. As price moves up into about the 7:30 time frame, can't bust it above the top of the consolidation. In fact, you get a shooting star, the opposite of a hammer candle. Still tells you there's resistance up there, Tom. You then get another bearish candle, bearish engulfing, bearish sash, however you want to look at it. And what does price do? It then goes ahead and moves down to the bottom of the consolidation. It works this way whether we look at a daily, we look at a 5-hour, we look at a 30-minute chart. So as we speak right now in the short term, and you're a short-term trader, price is trading below Stevie's red line. I'm going with the fact that it looks like to me that the ES Mini is doing is getting ready to go back to the bottom of the consolidation pattern. Now, if that's where you want to add to your position, then okay, so be it. I think there's other things you and I want to take a look at. But at this stage, that's what it's saying. Doesn't tell me it's going to bust it out. We see the consolidation going up and down. If you were going to add to your position, you're very good about adding on retracements or coming back to support. There you have it. This morning's lows, last evening's lows, that would be your point. And if price busts below that level, you know that you have a measured move equal to or greater than this consolidation. So you can put that on your screen. Likewise to the upside. If you bust through to the upside, you have a consolidation breakout equal to or greater than the consolidation pattern. So that's what we see with regard to the ES Mini, which would be for your SPXL trade on the short term. If you're taking a look at taking this trade longer, then what you have to do, and what I'm asking each of you to do, maybe somebody out there can do this for me. Because if you were going to ask me, Tom, the question, and thanks for asking, by the way, what is it in the market that is confusing you, Steve-O? And I think that's a very fair question. I think that is an excellent question. I don't know. This is where I need your help. Whether it's you, Tom, or it's you in the audience, or you in the you're good. So maybe it's somebody inside the Tiger's Den. This is what Stevie can't figure out: is what is the short-term event, that is on the minds of traders out here. The short-term event. Why does Stevie say that? It is because of this panel right here. It's not a chart. This data. This set of data. If we take a look at the spot volatility index, it's trading at 2013. Look at June of 2019, $19.02. What is the short-term event? I don't think it's the tariff schmariff stuff. Stevie Rhodes with TFNN will be right back. Maybe you've got an answer. Send it on in or give us a call. Be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So just before we went to break, what Stevie was posing to you or was asking you the question is, what is it? What is in the short term that has traders on edge, where they're buying insurance, so to speak, out here? And if we can answer that question, Tom, then we know what to be looking for. We have seen this pattern where we see the spot volatility index trading above all the futures contracts for, you know, I sound like a broken record. I hate sounding like a broken record out there. But it's been several weeks, 3 weeks, maybe even longer out here. And it's very unusual. And by the way, the equity futures contracts, if we take a look at November, December, January, February, March, April, May, June, July, they're really not moving much. So, and when this gets resolved, and it will get resolved, it's going to tell us that we had a serious bottom that formed out there. So you can hold it for 2 days, 3 days if you want, but the reality is you can hold it for a lot longer. Now, inside the Tigers, and the only thing that come in so far is the Mueller investigation. And Tarpon, maybe you're right. Maybe it is the Mueller investigation, but that's been going on for so long. And it seems like most everything is pretty much known, and we know what's going to occur out here. You know, is that really what has got traders spooked? Now, maybe it is, maybe it isn't. But recession. No, that's such hogwash out there. And I apologize, Pete. I mean, maybe that's your interpretation, but I'm talking about, you know, recession versus what the stock markets are going to do. Remember, what you and I always have to do, well, we don't always have to do it, but we all took an oath. That's a little bit different, right? If you're on this, if you're listening to this show, you and I, we took an oath. And let's never forget that oath. And that oath was that we are always going to be paying attention to what the other guy is doing. We're always going to be paying attention to the global flow of capital, because what you and I know is that capital has to flow somewhere, whether it's during a recession or not, Peak. And that's really what I meant when I said no, okay? What I really meant to say is what I'm saying right now. And I will say, no, it's not the dollar. Because where global capital will flow is where there's confidence. And so when you bring up the U.S. dollar index, and I know I'm getting off base here, but it is my show. I guess I get to get off base here. And if we take a look at, here is just simply the current contract, we can see it's made a 1 to 1.272 small a to b equals CD to the upside. If we just simply put in the continuous contract, it's the only way right now for me to take a look at the long-term picture here of the U.S. dollar index. What we know is that the U.S. dollar index bottomed way back in 2008. Okay, and it's been moving higher ever since. Yes, it has its ups and downs, but it's going to continue moving higher. It's going to continue moving higher because this is where the confidence is. I don't care whether they figure out an exit, Brexit, schmexit thing out here. And so for all those people out there, and you're not one of them, you being the tigers and tigresses out here, I know that you don't fall for the absolute BS that the market is going to struggle to go higher with the U.S. dollar index going higher. High because you're good. Because you know you do not follow information. You do not follow BS. You do not follow stuff that before Steve shared with you this chart, you're like, well, that doesn't make any sense. The U.S. dollar index bottomed in 2008. The stock market has been going up ever since. So all that stuff is just garbage. And so we don't pay attention to it. All this is just telling us is that there's more confidence here in the U.S. That's why you and I took an oath to make sure that we always know where that global flow of capital is going to. If you take a look at this stock chart here today, this is a part of your other problem. This is my segue back to Tom G's question out here. If we look at the Dow, we look at the ES Mini, you can see here that we know how the Dow is trading in terms of pound sterling, euros, yen. And what you want to see, Tom, in order to be able to hold that trade for a longer period of time is you want to see all four of these boxes be green. You want to see prices rising on everybody's screen, right? If I were to add, if you want, this is because you and I now have inside information. We're inside the minds of traders over in London who are trading in pounds, over in Paris that are trading in euros, or Italy, or wherever it might be. What the guys over in Hokkaido or Osaka or Kyushu or Wakayama City or you name it over in Japan, those traders that are thinking in terms of yen, because when they go to pay their bill tonight for their brewskis, and they're drinking some. It's 1:30 in the morning. They're still drinking some. They're paying in yen. They're not paying in dollars. They're thinking in terms of yen, no different than you're thinking in terms of dollars, and we have to think in terms of all of those currencies out here. Take a look at light sweet crude. Do you really think it stands a chance? It's moving lower in all currencies out here. Yeah. And just take a look at the percentages. 6% in dollars, down 7% in pounds, 7% in euros, 6.75% in yen to the downside out here. So, Tom, we just don't have the makings right now for me to be able to say to you that, yeah, that you've got the signals to go ahead and do what it is that you're asking me to do. Am I bringing it home for you? I hope I am. Lastly, what I'll say is that you want to take a look at the ES Mini and the S&P. I'll give you both out here. We'll do a twofer. Now, the positive is that this has made a significant bottoming pattern out here. And in the S&P, when it makes this, we're looking at the ES Mini, by the way, right now, when it makes this pattern out here on a daily basis, you don't ignore it. So there's a very good chance that the October bottom was a significant bottom. Very good chance. You still want to see price trading above Stevie's red line. It's 27.29. So I cannot argue with being long. In fact, I'd shoot myself if I were to say that. I'm just saying that there's some issues out here that certainly have to be resolved. What's that number for those of you that aren't tracking the ES Mini? Well, with regard to the S&P cash index out here, Stevie's red line is at 27.28 and a bit of change. Don't worry about the change out here. As long as price stays above that, then that says, okay, we're just testing support. Yesterday, there was a slight close below that. Today, we're just slightly above that. You'd like to have more conviction than that inside of your trade for the S&P 500. So I know I've kind of, belabored the point out here. Maybe I haven't. Maybe I have. I still don't know what that one thing is. Maybe Tarpon 2. Maybe it is. Maybe it is, Mueller. And peak, maybe it is a recession. Maybe Stevie just doesn't have it. It's garbage paying attention to what the markets are doing in terms of the major currencies out there. Nah, I'm just kidding you, because we can go back, because this will test the time out there and prove otherwise. So we know that that is really not the case out there. Is the oil drop a strong reason? No. The oil drop is nothing more than the quid pro quo for the Khashoggi death, killing, death. My goodness. You know, so it's just the Saudis now just paying up with, you know, cash walks, you know. It's terrible. It's disgusting, but it is an economic thing out there, and that's what's going on. Okay, so let's get to some other questions. Woo. All right, we'll have to do that when we get back from the break. I promise you I'll stay on track. The next question up is, can we take a look at the January contract for soybeans, which we are going to do when we get back out here. You know, when it made its bottom out here, not surprisingly, did it with that Tommy DeMark setup 9 count. Now price is testing its green line, sitting right on it. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we were taking a look at soybeans. We're looking at the January contract here for soybeans. And what we can see is that when it did bottom, when it bottomed back here, back on July 16, 2018, did with that Rhodes momentum indicator signal. And in fact, on that day, it gave you the bullish signal to go ahead and buy. Turns out that was the bottom. It was kind of similar to what we just looked at on the S&P 500 with regard to the most recent October bottom that had formed out here. So you can see how this tool works for all instruments, all time frames, and why we pay attention to it. Now, since then, what we have seen is we've seen two additional higher lows out here. We saw that take place back here on September 19th. We saw that take place back here on October 31st. October 31st was with that top of the mark set up 9 count. What we haven't seen is we have not seen the highs get busted out. So in essence, this is in a level of a consolidation, or at least what we can do is say that there's a ceiling on this. And the ceiling is in the 906 area here with regard to the January contract for soybeans. Right now, price is testing a key level of support. You expect that to do that when the lines turn from green to red, back to green. It says that the oscillator unchanged line should get tested. That, in essence, what it is doing right now. You can see how we have a rising price oscillator above zero. As long as that is in place, Mr. Z, then the outcome should be bullish. Should go test the top of its consolidation-ish type area. That's what this chart shows. But we can also go take a look at the market profiles. And as we look at the market profiles for the weekly, for the daily time frame, so we're going from right to left, we can see that price is above resistance. Resistance would be the top of the box. So respectively 876 and then 870. So that is also giving us a bullish oriented message out here. With regard to some shorter term time frames, you know, what we saw, whoops, why'd that happen? I know why that happened. You can see a huge breakout here. That breakout at 9:30 on November the 1st, wide-ranging bar to the upside. So you know that support is at the bottom of that bar, or I would say it's at the bottom of the bar at around the 849 level. Right now, we're seeing a series of lower highs, so to speak, and we've seen a couple of higher lows. So you know, just trading inside the cone of silence. The cone of silence kind of looks like this out here on a 240-minute chart, right? So here's what it's doing, and it's really going to be a break of that cone of silence that will tell us what its next move is out here. But again, on the daily and the weekly time frame charts, the signal out here for the January contract for soybeans is a bullish one. The question is just how high will it go, and we've already covered that. So I hope that helps you out. Thanks for writing in through the den and asking the question. Somebody else wrote in. I don't recall who it was. My apology. It was Peak that wrote in and asked, is a rig close to a bottom? And so that's an excellent question. If we take a look at, we're going to answer that a couple of different ways for you. And one of those ways is that we can see that price is moving lower, doing it with less relative energy out here. When it made its top, it did the exact opposite. Now that it's doing that to the bottom, it may be making a bottom. Now, we don't have a confirmation. What we need to see out here, Peak, is we need to see some type of bullish reversal candle. Doesn't look like that's going to happen today. Maybe it's tomorrow. Maybe it's next day. Maybe it's not at all. So this is only a potential bottoming pattern that is out here, but it's got potential to it. As you know, it's already in wave number 4 to the downside. Sometimes when that completes, you see some type of turn. That's what this chart is telling us on a daily time frame. Let's come over and take a look at our TAS market profiles. Let's pull those together. And as we take a look at those on a weekly time frame, you can see that rig has just been in a long-term consolidation. Now, when I say long-term, I'm referring to going back into 2015. December 2015. It's now almost December 2018. So this is in a huge long-term consolidation. It's near the bottom of that consolidation. It's near the bottom of its monthly profile, which is 926. We're trading 954. Volume this month, 114 million shares. Last time we were down was 300 million shares. The time before that, 368 million shares. I'm no genius. That's an understatement. But it looks like we are lighter volume than we were the last couple of times before. So if you're looking to buy this and play the consolidation, it sounds to me like you are, because you knew about this consolidation pattern. You didn't need me telling you about this consolidation pattern. I'd wait for the signal on the daily time frame chart. I'd wait for that bullish reversal candle and or a move above Stevie's red line. By the way, that level right now today is 1045. Whether you want to wait to that point in time or you just want to use that as your confirmation, should you get the bullish reversal signal, either one would work with me. From a weekly and a daily time frame, we don't have a TAS market profile that's going to assist you. We just don't have it. So that's why you're going to go ahead and rely upon Stevie's Rhodes Momentum Indicator tool out there, and you're going to wait for that bullish candle. Because if it doesn't show, well, then the only other thing that you can go by, meaning that the pattern evaporates, which it can, is then you've got to go against February in 2018, the 9th to be specifically. That's where it formed a nice little daily, looks like a hammer candle, close to a hammer candle. We're going to go ahead and give it the benefit of the doubt and call it a hammer. 24 million shares down there. You've done 11 million today. So you're moving into that swing point with maybe a tad too much volume. 24 million, if we just multiply, well, it's 130. We can divide by 4. What's 12 divided by 4? I think that's 3 times 6.5. That's 18. That's 19 million shares versus 24. Yes, it's light volume, but maybe still you'd like to see it dry up just a tad. The last time that price was down this way, we were about 20 million shares. That's October 30th. So it's kind of pushing lower with some volume out here. Now, to the extent, Peak, that rig is directionally correlated, and I don't know that it is, to the price of oil. I know that oil made a top right around October the 4th. This made a top October the 9th out here. I don't know how far lower we're going in light sweet crude. It's not a technical thing for me. It's not a technical thing. This is a deal worked out between our government and the Saudis out there. And I know that's just conjecture. How can I say that? It's just obvious. It's just so obvious that it's obvious out there. So, so to that extent, then you might need to factor that in. And I don't know how low light sweet crude is going out here. I don't know what that deal is. I'm not privy to the deal, but I'm also not, naive to think that there's not some kind of deal that is out there. And so the question is, how low will it go? And I don't know that you can trade this technically. We can trade rig and all that other, and all these other things technically. But hey, look, the reality is there really any reason? And it has nothing to do with our economy, folks, okay? Is there any reason that the Saudis can't push this down into the $45 level? We're at 56 right now. And do you really think they mind putting the crunch on the shale providers out there? Yeah, I don't think so. How would you think if you controlled that big spigot out there? Yeah, in any event. Steve Rhodes with TFNN. Dow's just slightly lower. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. So one of our other listeners writes in. So we've got a second to the Mueller nomination. And Earl writes in and says, "Hi, Steve. Maybe this news has traders on edge." Remember, this condition has been present for the last 3-4 weeks out here. But new indictments for Special Counsel Robert Mueller's investigation of Russian interference is the 2016 U.S. presidential elections are expected as soon as Tuesday. Today being Tuesday, CBS reports, citing, of course, multiple people with knowledge of the investigation. The old leaker, schneeker thing out there. Yeah, maybe it is. When it does get resolved, and it will get resolved out there, and we start to see that volatility index get back in line, then to Tom and each of you out there, you're going to see the S&P 500 continue moseying along to the upside out there. Until then, we just have a bunch of this back and forth stuff. How do you explain yesterday? Good question out here. You know, yesterday was going to be a test of Stevie's red line, probably anyways. It was going to occur out here. If you take a look at the indices across the U.S. out here, take a look at this chart. So this chart here, it's not a chart. It's part of Stevie's black box tools out here. And you'll see that we've got the equity futures contracts. We've got the major cash indices out here, the S&P, the Dow, the NASDAQ, the Russell, the semis, the transports, the composite, the New York, the NASDAQ composite, the Wilshire, the New York Stock Exchange, the US 100, the International 100, the FTSE, the Shanghai, the Hang Seng. You kind of get it, right? And if you look in the daily column out here, you see all these bottom confirmed, bottom signals. Yes, there's some weekly and monthly top confirms out here, so we've got competing patterns, but the ones on the daily are the newest ones, typically taking us back into the October timeframe. If you take a look at support, is price trading above support? Well, we're going to use Stevie's red line. You and I are. We know that during this hour, that's very important. We can see the ES Mini is above Stevie's red line. We can see the Russell is above. Right now, the NQ, you can see what the number is, so you can write it down on your pad of paper and say, hey, if price gets above that, it just continues to confirm the bottom signal that we have out there. You can see what the number is inside the cash indice. You'll see these numbers changing, or the cents changing. So, use the whole number as opposed to the decimals out here. But you can see, for the most part, price is above Stevie's red line in all of these indices out here. So we know what the market is trying to do. The only holdback as we speak right now is really in that spot volatility index, which will resolve itself. And look, maybe you've answered the question. That way I can direct you as to what it is that you should be looking for, because once you get that resolution, then you'll know what action that you should take. I have not been able to put my thumb on it. I don't think it's China and the tariffs. I think if you are a U.S. corporation, come on, everybody that is listening to this show is so smart, so intelligent, has so much knowledge, has so much common sense out here, that if you're working for Walmart or Costco or anybody that's buying goods in China, you're buying those goods based upon the Chinese currency, right? You've negotiated or renegotiated those deals. You would have already had them, because you would have known about the currency issues going on. And in this case here, with the weakening of the yen, and maybe it's going to continue to weaken even more out here, you would have mitigated the majority of your problems. In fact, you'd probably be making a boatload of money here on the currency conversion issue. So China's problems are really not the export-driven problems. They're not, because they've taken the strategic look. That if they leave the currency like this, let's just say it gets solved, and they leave the currency pair where it is, they're going to be just huge winners out there. It really is all about the currency. That's the whole thing. That's the point. It's about what's the Chinese yuan doing versus the U.S. dollar. Do you believe the U.S. dollar is going to get stronger, which I'm in, both hands up. U.S. dollar index is going to continue to get stronger. Interest rates are going to go up. It's going to just be trashing the international markets out there. Where's that money going to flee to? Are you really going to put your money in emerging markets? Really? You're not going to do that. Please raise your right hand and solemnly swear you will not do that, especially during a rising rate environment with the U.S. dollar index getting stronger, where the confidence is really here. Yeah, it's all flowing here until proven otherwise. And right now, it's proven that it's still flowing here. So there aren't any other questions that I see out here, so I'm really not sure where to go. I've checked the emails, nothing inside the dinner. I think I've gotten everything. And we've got to kill 13 minutes. I don't mean we've got to kill 13 minutes. I just mean we've got 13 minutes. Oh, okay, we got a question. Kay writes in. Thank you, Kay. I'm long the Russell 2000. For a bounce, I've got 1540, then 1560 next. What do you think? Well, Kay, let's go take a look at the Russell 2000, try to answer your question. And as we do that, we're going to take a look. We're going to take a look at the daily time frame out here. And so it's kind of similar, really, to Tom's predicament. In Tom's predicament here, we can see that what you want to see from the Russell 2000 is you want to see price stay above its daily red line. That's 1518.60 to speak right now. So you want to make sure that price stays above that. That's the daily time frame. That's the first thing that you want to focus on and pay attention to. On a short-term basis, and I do mean short-term, because let's go do the same. Oh, come on, work with me here. There we go. Let's put the 30-minute time frame out here. On the ES Mini, it was very easy for us to see on the ES Mini the consolidation. Now, it just so happens that the high this morning inside the Russell 2000 on a 30-minute time frame, K, was a seventh wave move, wave number 7. Yeah, Bummer, eh? But you probably were counting those waves out here. And you've got that Rhodes momentum indicator bottom pattern. We just don't have, I don't think the Russell's going to take off without the ES taking off, without the NQ taking off, without the Dow taking off. You kind of get my drift out here. I know you're asking for what are the next levels. Well, that 1540 level was hit. It was hit with wave number 7 out there, and we've seen price back up. 30-minute time frame chart isn't giving me a whole lot out here to provide a gauge for you as to where price is headed to next. If I take a look at the hourly time frame, is there anything else that shows up on this chart? No, not really out here. And here, price has been able to stay above its time frames red line at 1523. So that's a level. So you're just trading in the same kind of range. You're in a range. Tom is in a range inside the ES Mini out here. And that's really about all that I can provide you with. I wish I had more. I don't have any more. So I hope, Kay, that helps you out. I think it is slow growth and deflation for the fourth quarter and into the first quarter. Yeah, but what we wouldn't see there is we wouldn't see the spot if it's further out, okay? And so you're talking quarters here. And so if we take a look at spot volatility index, then we could at least go out into the G contract, okay? So the first quarter, end of the first quarter, March of 2019. And the spot volatility index for March of 2019 is 1896. The spot fix index is 1991. Yeah, we wouldn't see that. I'd see the future contracts here, the futures contracts for the following months trading higher than they are. And they're not. Look at all of the future contracts. They keep going lower the deeper we go, for the most part. We'll be right back. Something else short term.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Let's go ahead and recap what we talked about this afternoon. First, with regard to the general markets, or only with regard to the general markets. Right now, we've got a consolidation pattern inside the S&P. We're taking a look at that via the 30-minute chart for the ES Mini. It's a 30-point consolidation. The bottom of the consolidation around the 2720 level, the top of the consolidation around 2750. The break of this area to the upside or the downside will determine the next 30 points, or equal to or greater than, at least the next 30-point move inside of the markets out here. Just consolidating. These consolidation patterns can go on for a long time. What else should you be paying a look at? Well, in the case of Tom, in the case of K, I would say, even though you didn't add, well, in the case of K, you did. Watch the weekly bottom of its profile, 1512. In essence, it was tested and rejected. As long as Russell 2000 stays above that, it has the opportunity to move higher. Not necessarily right now today, but it will have tested a level of support. The NQ, the indice that has struggled the most, has tested and rejected the bottom of its weekly profile. That level is 6810. If you can't bust them out to the downside, maybe it tries to bust them to the upside. By the way, the upside inside the NQ is 7728. It has a lot of work to do before it can get up there, but that is the top of the box. The first move would be to 7039. The next is 7147. A break below 6810 brings 6706 into play. Key numbers to watch, 1512 and 6810. Unfortunately for the ES Mini and for the Dow, they're kind of in between profiles. The Dow would have support at 24,967. Anything below that says you go back to revisit the October lows, or likely. In the case of the ES Mini, its levels of downside support are 2695, 2671. But we know that's trade into consolidation, so we know about that 30-point move. So that, in summary, is the markets. The spot volatility index is a little bit out of whack. It's got the hair on the back of its neck standing up for some short-term reason. That's what you need to think about and try to figure out. Because whenever that short-term reason gets resolved, then the markets will be ready to do the Toyota motor zoom, zoom, zoom to the upside. Thanks so much for being here, folks. Stay tuned. David White's up next. Oh, I won't be here tomorrow. I don't think I will. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletter.